So let me ask you something. How would you feel if you lose, let's say, 10 rupees? I mean, probably nothing, right? What about 100? It will pain a little. Then how about 1,000? It will sting for bad, for sure. And finally, how about a lakh? I mean, in this case, you won't be able to sleep for sure. Now imagine a person who has lost almost 99,000 crore, that too in a day. Yes, I'm talking about Mr. Gautam Adani, chairman and founder of Adani Group. But why all of a sudden? And is it, as many are saying, the beginning of the end of India's third largest conglomerate? Let's find out. Hello guys, I am your host Siddhant. This is Junior Talk. This is where we talk all that is happening in the world of economy, finance and business. Welcome to the show. So last month, a US based research firm called Hindenburg published a 100-page report which was made over 2 years and spanned across 6 countries, alleged some serious corporate governance issues in the Adani Group of companies. According to the report, the group and its executives have been involved in several illegal and unethical practices like round tripping, share manipulation, accounting error, and unidentified financing. The report also said that the group is highly overvalued. That means the current price of the shares of the group is not justified by the financial, and it is highly leveraged. That means the company has too much borrowings and loans on its books. At the end of the report, Hindenburg also mentioned that they are short on Adani Group. That means if the share price of Adani will go down, they will get profitable. Shorting is basically a stock market mechanism where you bet against a company rather than for it. And as expected, since the report came on 24th January, the group has lost in total of 110 billion plus in market capitalization. Some of the flagship shares like Adani Enterprise, Adani Ports, Adani Total Gas is down by 50, 40 and 55% respectively. To be specific, this is not the first time that the group has been under fire for corporate governance issues. Back in July 2021, a report came out that said that the group is manipulating the share price through escrow accounts based out of Mauritius. It said that the group is rerouting the money through Adani Foundation into these accounts based in a foreign jurisdiction, that is Mauritius. According to SEBI guidelines, this is illegal because it prevents the market from discovering the real price of the shares, hence resulting in an overvalued share price. But this time, the Hindenburg report goes deep into the group and blame it to be running hand in hand with the regulator as well as the ruling government. In between all this, the group has came out with its own reply to the report and said that the report has a false narrative and some of the allegations are under investigation and some have been acquitted by the highest court of India. The timing of the report is also very crucial. The report came at a time when the Adani Group was planning for an FPO, that is a follow-up public offering for its flagship company Adani Enterprise, which was India's largest FPO at 20,000 crore. Because of the report, the FPO received very lukewarm response and several big industrial houses had to bail out it at the end. But right after the full subscription, the board decided not to go ahead and scrap the entire FPO proceedings. Another major issue that has been raised in the report is borrowing. In total, the top 3 PSU banks in India have an exposure of 40,000 crore to the group, which is SBI at 27,000 crore, PNB at 7,000 crore, and Bank of Baroda at 5,300 crore. After the stock volatility, the chairman of SBI, Dinesh Khara, came out and said that the loan against the group is secured with tangible assets and the loan amount represents only 0.88% of the total loan book of SBI. But the bloodbath is continuing in the market. The group shares are plummeting each day on an average from 5 to 10%. Many investment banks like Credit Suisse and Citibank has denied to accept Adani bonds as collateral. After the volatility, the market regulator has put the entire group stock under additional surveillance mechanism. Most of the fund houses and rating agencies have downgraded the group stock. Many are also raising questions on the proactiveness of the regulators and also how complacent they have been on issues such as this, which has been in the public domain for such a long time. So, yeah, the group is on a very shaky ground in terms of investor confidence and future financing. Though corporate governance issues are not new, but this has put on a serious dent on the workings of Indian regulators and the market functionings. Going forward, it will be interesting to see how the regulator put these charges to rest and frame new regulation for stopping this sort of activities. That's all for this episode, guys. Thank you so much for listening. I hope you liked it. If you did, then do follow and share it on Spotify. Until next time. For disclaimer, I do not hold any positions in any stocks of Adani Group. So do listen and take your decisions accordingly.